afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, the 12th of January. I hope you're doing well. Interest rates are sitting at 4-month lows today. We have the Consumer Price Index report that came out this morning to thank for that. We're going to get into that in just a second. Here are the averages nationally. Mortgage News Daily has the 30-year fixed conforming rate at 6.07% today. We were at 6.5% this time last week. 6.39% a month ago. So we are down, not quite a half a point in a week in rates, y'all. So when you see a 6.0 anything, you got to be kind of looking at that and wondering when we're going to see that tick down back into the 5s. And it's entirely possible we're going to see a few blips here and there that get us back into 5s. There are some folks, as we mentioned on our call last week, that are predicting that by mid-year we could be in the low 5s, if not right at 5%. Getting consensus around that, though, and finding two economists that agree on that, pretty hard to find. I will say, though, that I am kind of in the camp of expecting rates to be closer to that than farther away. So I do think that we're going to continue to see rates improve over the next several months. And here's the reason why. Bottom line is, our current rates and the rate of escalation that we saw in rates was driven entirely by inflationary news, and inflation is seemingly getting into check. We had a very good report on the Consumer Price Index that came out in November. Markets are always concerned when you see a report that gives you better news than you're expecting, that it might have been a fluke. Well, today's CPI report came in improved from the November numbers, however, slightly, just a little bit better than expected on the numbers today. But, the bigger news probably is that it agrees with and points out that the report in November was not a fluke and that inflation is in fact moderating, and moderating pretty nicely. So if that trend continues, remember that every month that goes by, we're comparing the Consumer Price Index to the current month with its 1 year ago counterpart. And those comparisons are very stark, and we're seeing significant reductions in inflation when you do the year-over-year comparisons with each of these reports that comes out. That has the effect of moving the markets, and it moves interest rates lower. So we are seeing that. There's no reason to not expect that that's going to continue as we continue to get more data on inflation. The Dow is also pretty happy about it. Dow's up 217 points today after a really strong 700 plus point rally last week. Dow's up to 34,189 today. That's the highest level in 6 weeks on the Dow. So markets in general, you see money go back to work when inflation starts getting under control. So in any event, that is the update for today. I'm going to continue to keep an eye on it, y'all. I did get a number of folks that asked me to come out and visit with their offices to present a forecast on where I think things are headed this year and to have a discussion about interest rates. I want to extend that invitation again. If you have any interest in your office, or if you believe your broker owner would be interested in having me present to your group, feel free to give me a shout, and I'll be happy to come out and talk to your group and have a good discussion about where we might be headed market-wise. So I'm pretty bullish about where we're going to be this year, y'all. I think we're going to have a much better year this year than we did last, and I'd like to share the reasons for that. So in any event, call me. You've got all my numbers on the screen. Have a blessed week. Stay safe. We will talk to you soon.